So I'm running an experiment. Starting today, I'm putting €5 every trading day into a completely normal, boring S&P 500 ETF, VOO, the kind every financial advisor recommends, the kind that's supposed to make you wealthy very slowly over 30 years. And at the same time, I'm putting another €5 every trading day into TQQQ, which is not boring at all. TQQQ is a fund that moves 3 times what the Nasdaq moves every single trading day. If the market goes up, it goes up a lot. If the market goes down, it goes down a lot. It's the same amount of money, the same person, me, starting today, €5 a day, 5 days a week, €25 a week per portfolio. One of these is going to massively outperform the other over the next few years. I just don't know which one. And I thought, why not find out? I'm not a financial advisor, I'm not a fund manager, and I'm not telling you what to do with your money. This is an experiment, it's entertainment, it's one person putting his own money into 2 funds and documenting what happens. Always do your own research before investing in anything. Okay, now let's get into it. My name is Floris, and I'm not going to pretend I have some secret edge on the market. What I do have is a question that's been bothering me for a while. Is playing it safe actually the safest thing to do? Because here's what I keep hearing. Buy a diversified index fund. Don't touch it. Wait 30 years, and honestly, that probably works. But there is a whole category of investments which are called leveraged ETFs, that most people treat like they're dangerous. They're too risky, too complicated, and not for normal investors. I wanted to actually test that. Not with a backtest, not with a spreadsheet from 10 years ago, with real money in real time starting now. And that's what this channel is about. I've always been a quite conservative investor, a savings account, a simple index fund, nothing exciting. And then about a year ago, I fell down a rabbit hole. There is a community on Reddit where thousands of people having serious data-driven conversations about leveraged ETFs as a long-term strategy. Not as a gamble, not as a get-rich-quick scheme. It's a genuine investing approach backed by decades of research. I read everything I could find, the backtests, the debates, the horror stories from 2022, and I kept coming back to the same question. What would actually happen if a normal person just tried it? Not in theory, in practice. So that's why we are here. Here is how it works. I have 2 portfolios running in parallel. Portfolio A, I call it the boring one, and contains VOO. €5 every trading day are going into VOO, Vanguard's S&P 500 ETF. It tracks the 500 largest companies in the United States. It's simple, proven, and a benchmark everyone uses. Exactly what your bank would tell you to buy. And then there's Portfolio B, the amplified one, TQQQ. €5 every trading day into TQQQ. That's ProShares UltraPro QQQ, a 3 times leveraged ETF on the Nasdaq 100. So when the Nasdaq goes up 1%, TQQQ goes up roughly 3%. And when the Nasdaq goes down 1%, you get it, it also goes down 3%. And the rules are simple. I buy every trading day, Monday through Friday, no exceptions. Good market, bad market, scary headlines, doesn't matter. I don't try to time anything. And every week on Wednesday, I post an update. Real numbers, no rounding up. The total cost is €25 a week per portfolio. That's €50 a week combined, about €2,600 a year, which sounds like a lot until you realize that's less than most people spend on things they don't really need. For example, a Starbucks coffee. So what did I do? I placed the first orders on Robinhood. I use Robinhood Europe because I live in Belgium, and I'm going to buy €5 of VOO first. I place the order to start every day, and there it is, €5 into VOO, the boring one. Now TQQQ. So I opened the app, I looked for TQQQ, placed a €5 order, and I launched it. €5 into TQQQ. the amplified one. And that's it. That's the whole system, 2 orders, 10 euros every single trading day. And from now on, this happens automatically every day when the market opens. I don't use emotion, there's no timing, no checking the news first, just buy every trading day. Every update video will have the same structure. First, we will take a look at the numbers, both portfolios, exactly where they stand. And secondly, the market context. I will pull up the CNN Fear and Greed Index every week. That's a score from 0 to 100 that measures investor sentiment. 0 is extreme fear, 100 is extreme greed. It's a quick way to understand the mood of the market that week. Are people panicking or are they feeling invincible? To give an example, this week the index sits at 31. That is fear territory. Not panic, but definitely not confidence either. And you can see that reflected in both portfolios this week. VOO held up reasonably well, while TQQQ felt every point of that nervousness. A score of 31 means investors are cautious. They are not selling everything, but they're not buying aggressively either. This is actually a decent starting point for a long-term experiment, because if the market is already in fear territory on day one, there's nowhere to go but up. As a third thing, 3 things that happened in the market that week that affected our portfolios will be discussed. Not a full news recap, just the 3 things that actually mattered. For example, this week, Event 1, AI stocks bounced back. Technology stocks recovered strongly after investors realized that AI spending by major companies remains very strong. Semiconductor companies like Nvidia led the rebound and the Nasdaq outperformed the broader market. Since TQQQ is a 3 times leveraged Nasdaq ETF, it benefited the most. Event 2, interest rate uncertainty. Markets became more cautious as stronger than expected economic data suggested the Federal Reserve may keep interest rates higher for longer. Higher rates typically hurt fast-growing technology companies, and that created a headwind for both VOO and TQQQ, especially TQQQ. Event 3, the Middle East, tensions eased. Investors became less worried that the conflict would disrupt global oil supplies. Falling oil prices reduce inflation pressure and are generally positive for business and consumers. That gave the broader market some support going into the end of the week. So to summarize, AI recovery pushed TQQQ up, rate fears pulled it back, easing geopolitical tensions gave both portfolios a floor. And that is the week in 3 sentences. And finally, one concept explained. From whatever happened that week, the market decides the topic. And that's it, that's the format, 10 minutes every Wednesday. Now, before you think, okay, I'm just going to put everything into TQQQ and retire early, let me explain why this experiment is actually interesting and why the answer is genuinely not obvious. TQQQ has one specific feature that makes it very different from VOO, and it's called a daily reset. TQQQ doesn't just triple your returns over time, it triples the return every single trading day, and then it resets. That sounds like a technical detail, but it's really not. Say, for example, the Nasdaq drops 10% on Monday, TQQQ drops roughly 30%. So if you started with a 100 euros, you now have 70. And now on Tuesday, the Nasdaq bounces back 10%. You would think you're back to where you started, right? Well, you're not. The Nasdaq went down 10 and then up 10. That gets you back to 99 euros, not 100, that's just math. But TQQQ goes up 30%, but from a base of 70 euros. 30% of 70 is 21, so you end up at 91 euros. After 2 days where the market basically went nowhere, TQQQ lost 9% of its value. That's called volatility decay. And it's the main reason people say TQQQ is too dangerous to hold long term. Here is the thing though, in a market that trends upward over time, and historically the S&P and the Nasdaq have, those amplified gains on the good days can outweigh the decay on the flat days. The question is whether you can hold through the periods when it feels really terrible. And that's exactly what the experiment is testing. Not just the math, but whether a real person buying every single trading day can stick with a 3 times leveraged fund through a real bear market. I really don't know if I can, and that's why I'm doing it in public. So every Wednesday there is one update: portfolio values, fear and greed index, 3 market events that mattered, 1 concept explained. And some weeks are going to be boring, both portfolios up a little, nothing happened, or down. Some weeks are going to be wild. TQQQ swings 20%, the index hits extreme fear, and Nile will look very smart or a bit foolish. But these are the weeks worth watching. Think about it this way: the S&P has had years where it dropped 40-50%. A 3 times leverage fund on the Nasdaq can drop 80% in a bad year. That's not a typo, it's really 80%. If that happens during this experiment, I will be on camera talking about it. No hiding, no skipping that week, no pretending it didn't happen. Because that is exactly when this channel becomes most useful. Anyone can document the bull market. The real test is what you do when everything is down. And if you are someone who found this channel through a Reddit channel or similar communities, you already know the theory. This channel will be the live version. If this sounds like something you want to follow, please subscribe. This only works if you're watching from the beginning. The story only makes sense if you see the whole thing. The first update goes up next week. Both accounts start at €0 today. €5 a day, 5 days a week, 2 very different funds. Subscribe because you're curious. Subscribe because you want to see what actually happens. Subscribe because part of you wonders if the boring choice has been quietly costing you money too. I'm going to find out, and I'm going to do it in public every week, every Wednesday, for years, I hope. And if you want to follow along with the same broker I use, there is a link in the description. Full disclosure, it is a referral link. You get a benefit, and so do I. And there's one thing I can tell to myself and for the channel: may the best ETF win. Would you have chosen the same 2 funds, or would you run this experiment differently? Let me know in the comments. I will read every single one of them.